Welcome back to the Cow Guy Show. Thank you very much. I'm Scott Shelby, otherwise known as the Cow Guy. It's the black and white jacket that gives it away, I think, right? All right, here we go. Most investors would like to know if the bubble has burst. Do we need to, as Tiny Tim would say, tiptoe around the crypto? I don't know. How low can we go? The percentage losses are starting to really add up here, and the Fed hasn't even begun their tightening process yet. So our latest economic indicators are also coming in a little bit weaker than expected. Where does this financial slide stop? Please welcome to the show, President of Walser Wealth Management, Rebecca Walser. Thanks for being on the show today again, Rebecca. I mean, we've seen a lot of movement in that crypto space, and it's shockingly volatile. We've had that Bitcoin was almost 50% off its November highs, I think, right? Like 66 down to 33. I mean, what do you think's going on there? What do you think's going on there?
You know, Scott, this is a asset class that's ahead of its time right now, and I'm not disparaging it in any capacity, but I want to give you kind of and the audience kind of a taste of how confusing it is. So the IRS basically called it property and said that if you buy and sell it, you'll be subject to capital gains, the standard capital gains scheme. The CFTC, the Commodities Future Trading Commission, calls it a commodity. And the SEC, Gary Gensler, they're obviously very much going after. So as soon as Coinbase IPO'd last year, which is the largest exchange for crypto, they started to talk about this lend. They wanted to do a lend program where it would basically be a lending program. I was going to pay 4% interest, and the SEC came in and said, we think you're going to be in the security realm, and we're going to start to regulate this. And of course, Coinbase went back and said, we need to understand how you're seeing this as a security and where your jurisdiction is to regulate this. And so this is all that's going on. So there's a really underbelly of it's not really decided at this point, Scott, how it's going to be regulated, how it's going to be treated. And so that's a concern, regulatory concern. But then you also have these highs and these lows, these wild swings. And so what I surmise is as equities start to kind of trickle back up and people think, oh, it's just a phase, we're not really going to have a recession, we're going back up, people maybe sell or divert some of their crypto into the equities. And then the second that the equities start to tank again, they'll go back to crypto. We're seeing this because usually we see that with gold, Scott. We see people going back and forth in between gold and equities. But what we've seen it this year in the last 18 months is really back and forth between crypto. Right. But the problem is the regulation is just unclear. And the SEC really wants a dog in that hunt.
Well, yeah, regulation tends to screw everything up. You're right. And number two is what you said about, I look at, I do something on this show, and I'll do it in a little while, called my go-tos: gold, oil, the 10-year yield, and the U.S. dollar. I look at those things when I get out of bed every morning, just to kind of get a feel for what the day is going to look like, right?
Yep. Mm-hmm.
But I've had to almost kind of backtrack and apologize by saying, you know what, gold hasn't really done anything all year long. I mean, it's been between that range of 1750, 1850, but where it's, Bitcoin has stolen a lot of gold's luster, right? And,
exactly.
And so, I've kind of been wrestling, and I was in the show in a meeting with producers this morning, thinking, how do we bring Bitcoin into this? And you've been the perfect person to do that, but that's something that's kind of been also another indicator for the market, because it's a pretty important thing, just like gold is. And if you look at gold, you probably should look at Bitcoin. What do you think?
Yeah, I mean, obviously, Bitcoin's a lot more speculative at this point than gold is, because gold has established God's money since the Old Testament. So we know gold, we know how regulators look at it, we know how countries look at it, we know how it can be exchanged for actual fiat currency. We know all those things. So gold is, I think, a much safer bet than crypto by far. But I do think that a lot of speculative investors and people that are wanting to take the risk are betting on Bitcoin as opposed to, or crypto, Ethereum, all of them, as opposed to gold, where they would normally maybe be hedging out of equities and going over to gold. So I do expect, though, Scott, that we will see a run up in gold this year, because I am expecting that this market is just the beginning of, unfortunately, us swallowing the macroeconomic policies we've been following since 2008 with quantitative easing, the Federal Reserve really surplusing us out of all of our problems. And we can't do that indefinitely. MMT is not something that can actually be done indefinitely. You will have inflation. You'll back yourself into a corner like the Fed has done. And that's where we are.
All right. Well, that leads me to my last question. We got a couple minutes left. So another economist came out today and said 8 rate hikes. Operationally, I don't know how you do 4, but and I'm in the camp of maybe 2, because I think it's one of those wait and see things, Rebecca, because this whole thing could really melt down if these people try to get out in front of, and they always overshoot, right? You might see these markets kind of do a lot of the work that the Fed doesn't have to, because we've kind of had a financial reset. So where do you stand, as real quick, 1 minute, how well do you think the economy is doing, and then what would that lead to as far as rate hikes?
I think that the economy is not doing great right now. I think that we have stimulated and sort of tricked ourselves into thinking that the economy has done well, but
So agree with you.
certainly with with next to zero interest rates and 120 billion of the Fed buy-in per month, which we had through Corona, I mean, it's really easy to have a market that looks great. It's really just surface level, and that's where we are. I think, Scott. I don't. 8 rate hikes would be impossible. I don't even see how that would be logistically possible. But I mean, 2 to 4, I think, is definitely within the range of expectation for me. And the market's not going to like it. We know the market's not going to like this year. They're not going to like the taper. They're not going to like the runoff, and they're certainly not going to like the hikes. But yet, this is the reality of where our economy is. So let's stop faking it and let's start really making it strong again with true fundamentals and not just fake stimulus all the time, which we can't do indefinitely.
As I know you do some of this work in your firm, I think this is a big lesson for those folks at the end of last year that said, I don't want to sell because I don't want to have to pay capital gains tax. I mean, I think they'd like to have that sentence back because, by the way,
Yes.
the underlying
Yes.
asset can go down too, right? So
Yes, thank you. Pay the tax and take the gain. What are you talking about? I tell people all the time, please don't let the tax tail wag the investment dog. Please don't do that and then the capital gains are so low, Scott.
right.
Gains at 15 and 20%, you're never going to pay them. You're never going to sell out. Just stay in and just die with all these stocks. That's the way it's going to go for these people.
Use that.
You know what?
Use that as your lesson next year, right? Because this was a good one. I really appreciate it, Rebecca. Fantastic guest. Thank you for being on the show. You're part of the reason why it's doing so well. Thank you very much. Rebecca Walser from Walser Wealth Management. Okay, when looking at the markets, I do have my go-tos, as I just talked to Rebecca about. That's gold, oil, the 10-year yield, and the U.S. dollar. Let's take a look at gold. Gold is up a little bit today, still moving up against that 1850 level, the top end of that range we've had, I don't know, about 6 months, but still not reacting very much. Crude oil, that one's taking it on the chin. It was down more than this, but right now we're off a $1.91 at 83.23, making a run towards that 80 level. The U.S. dollar got stronger today, made a run at 96, had a 96 handle on it, backed off just a bit. We're just under 96 at 95.83. And then finally, this is the one that everybody's been looking at and how this handles. 173. So the market got nervous and the yield went down rather than up when everybody was expecting it to even go higher because of all these interest rate hike talks. All right. Coming up, it's all about the close. We check the closing settlements of the commodities markets as Chris Robinson from Robinson Ag Marketing offers insight on the driving factors behind them. You're watching the Cow Guy Close on RFT TV. We'll be right back after this.